All right, so for tonight's video, I'm gonna do a little lesson on manipulation because the manipulation is something that a lot of new traders aren't really trained to recognize, and it's such a vital concept, especially in something like an ICT's perspective, but just general trading. You always want to have manipulation before you enter your trade, and I feel like a lot of people don't put a good enough emphasis on it, especially for people who are just starting out and not get trapped on the wrong side of the market. So I'm going to start by just generally speaking on what manipulation is. So what do we look for when price is manipulating, right? So the first requirement for manipulation, good manipulation that you can look to trade against, is going to be a clear range or direction the market is trading in. So for example, let's say we have some consolidation, right? Some pretty, sloppy, we pop out, maybe we're up here, we have some equal lows down here, some equal lows here, and we have some equal highs here. So we're just kind of boxed in and by these, let's say the bodies are like down here. So we're kind of boxed in this little range here, and we got some wicks out the top. So for a bullish manipulation, you want to see there's clear targets on one side of the range, and there's clear targets on the other side of the range. So you might, let's say, for example, you trade an IFVG system like I do. Maybe there's an inverse fair value gap here, and maybe you take this inversion, right? So let's say this low is this goes a little lower, so that we take out this low inside this range, and you take this IFVG pushing for these highs, right? You're gonna get chopped because there was no manipulation in the range. There was no manipulation outside of the range, sorry. There was only just an inefficiency inside the range which was taken. You're gonna get stopped out down here, or you're gonna get stop break even if you move it super fast. You're not going to be able to efficiently trade this price action. So what you wanna wait for is manipulation, right? So let's say we're trading inside this range, and all of a sudden we shoot out the bottom, right? Let's shoot out the bottom, and one thing that we want to clear, so let's write criteria over here. Excuse my handwriting. So first criteria for good manipulation is displacement. And displacement, if you're not already aware, is if we have displacement basically just means a price move which creates some inefficiency along the way. Let's say this is a fair value gap, and maybe we close the candle here, and then the next candle opens with the volume imbalance, right? So these would be inefficiencies which would count as displacement through some level. Let's say the level's like right here, okay? So that's our first criteria, is displacement. Okay, so we want to see displacement outside of this range, down underneath. Okay, so now we've got displacement, and we swept sell side liquidity. That's the second criteria, is going to be taking liquidity, or I guess we can make it a sub criteria, taking liquidity, because you want to see the liquidity being taken as price displaces. Okay, so price displaces down here. Okay, now let's say we have some inefficiency right here, we have some gap. Now we've taken the liquid down here, and it looks like we're going down, right? Oh, we just consolidated. Oh, we just broke out down to the bottom, right? You have to get yourself out of that school of thought. A lot of new traders, myself included, I always used to look at it like this. I would literally my first strategy write-up, in fact, the first time I ever tried to write up a strategy back 2 months into trading. Not even trading, literally just learning. I barely even traded at that point. I just had an eval I didn't trade on. I wrote down, I was like, look for a displacement through a level, and then a fair value gap to trade back into, and then continue that way. That's what I thought. So I was always getting caught in manipulation. I took so many losses because what would happen was I would be like, oh, for example, I started with the 2022 model, and the 2022 model is entirely based around manipulation. The issue is it's not clearly defined. I mean, at least it wasn't for me. Maybe some other people got the memo, but me personally, it wasn't very clearly defined. I didn't actually have a proper understanding of what manipulation was. So I would try to short these kinds of gaps and try to take price down. And every single time, boom, blasted through, stopped out, right? So I was like, what the hell? I don't know what's going on here. It took me a long time to figure this out, and a whole strategy switch, right? I stopped using the 2022 model for entries, or at least a fair value gap pullback. I guess the 2022 model is pretty generally applicable. That's not super relevant. So basically, we have sell side liquidity. We have clear targets on the other side. Let's put that as a second criteria, because clear targets are also important. So after we've displaced through this low, took liquid, now we want to see that price has left some clear targets for us. For example, right here, price has left equal highs. Okay, so price leaves these equal highs, which is a very high probability draw on liquidity. We've got 3 highs that are pretty close to each other. There's going to be a lot of buy side liquidity stacked up above these highs, right? Everyone's putting their stops up here. So now what we want to do is we want to watch price displace back through the previous leg. So we want to see consolidate, steep drop, or steep, it could be opposite. I mean, just inverse this if you want a bearish model, right? It's applicable both ways, just some vice versa shit. This inefficiency wants to be violated. Okay, so let's say there's a candle close right here. Okay, this candle closes above this inefficiency, which would be an inversion fair value gap in this case. If this was a fair value gap, this would turn into an IFVG, inversion fair value gap, and that is a strong sign that price is going to continue going up here and take out this buy side liquidity. Okay, so for example, for a strategy like IFVG, I learned this from Dodgy, and this is a strategy that I found super intuitive to myself. This strategy is 100% dependent on manipulation. It's so important. You can't have an IFVG without manipulation, right? So if you're looking to trade IFV trades, make sure you have a good understanding of manipulation. So for the second criteria, we want to have a good target. Might be kind of all over the place. Sorry if I'm kind of all over the place. I'm literally taking this off the top of my head. I had no plan. Okay, so criteria for good manipulation, we've got displacement in the other direction, taking liquid, and then we've got a good target, and we've got violation of inefficiency on the manipulation leg, okay? So we'll go into some chart examples in a second, but these are going to be the three criteria you're going to look at for manipulation, okay? For a range manipulation, and this is generally applicable, but this example right here is a range manipulation, okay? Now we can also do trend manipulation. Trend manipulation is more of the same, but it just looks a little different. So this happens a lot on uptrends, not as much on downtrends, okay? So this is an interesting pattern that I've noticed in my backtesting. This is something that happens frequently on uptrends. You'll see a lot of these stop runs, manipulation, and you don't see it a lot on downtrends. If you have a really long uptrend, you're almost guaranteed, let's say our target is right here, you're almost guaranteed right before the target, stop hunt. Inefficiency, stop hunt. Holy shit, we're freaking out. The market's not actually going to my target. We're selling off 3 huge red candles, super volatile, shit's flashing all over the place. Total panic in the market, stop losses taken out on these levels. And then, you know, we stay calm, take a couple IFVGs, we chop a little bit up, and we hit the original target, right? So this is not, you have to be careful, especially if you're in a long position. And I've gone over this in one of my videos before, but if you're in a long position from like, say right here, down here, you're riding this up, you're almost at your target, and then you get manipulated out. You want to make sure that you're not trailing your stop loss to obvious places. Let me go to some chart examples actually, because this is literally the same thing as this. Like you would want to see, for example, to meet the good target criteria, instead of leaving equal highs at the top of the range, we still want to take liquid, right? We're taking liquid down here, we're taking low resistance liquidity. And aside from just taking liquid, for our good target, we want to get close to we want this to be an external high. We want to get close to it, but we don't want to get all the way there. Or we hit some other internal, let's say there's a downtrend, like for example, let's just say there's a downtrend all the way over here before the market happens, and there's an internal high that gets swept here, and we get a little reversal pattern off the internal high. But the hour, let's say this is on a 1 minute chart or a 5 minute chart, you're going to, if you have a higher time frame bias, let's say 1 hour, 4 hour bias to some external level, like this high, and you see a big sell-off against you before it reaches that high on the shorter time frame charts, you can expect this, because this will be the wick of some higher time frame candle, right? Like as we went over in the Power of 3 video, there will be some higher time frame candle that forms somewhere in here and that needs a downside wick. So we're going to be wicking out on a higher time frame candle that's going to end up looking something like this once we flip back in the original direction, right? So there's going to be this big wick, which is going to be the manipulation of the candle. And that's what this trend line manipulation is doing. And a lot of times what you're going to see is as we manipulate down, there's going to be a higher time frame in it. Let's say there's a higher time frame inefficiency on this leg right here. So we can call this right here higher time frame PDA. Could be an order block, could be a breaker, could be a fair value gap, it could be anything. Higher time frame PDA, and now price is going to want to rebalance this PDA. If you draw this out, maybe we overshoot it a little bit, because remember, we're on lower time frames. We're creating wicks for higher time frame candles on lower time frame, and the wicks of candles can color outside the lines as long as the bodies respect the PDAs, right? So this manipulation is going to take out sell side liquidity, right? We've got sell side liquidity here. It's left a good target. We've almost got to this external high. We still have the longer term draw on this external high. There's no SMT. So the liquid hasn't been taken on another correlated asset, which means that we still want to use this as a higher time frame target. We see this lower time frame sell-off, 1 minute, 5 minute. The candle, higher time frame candle, might look something before it happens. It'll look something like this, where we just get a strong body down, tiny little wick up top, and there's no wick down here. We're at the low of the candle. Then this is going to turn into this, like, I guess you could call it a hammer candle. I don't know what the fucking terminology is, but we're going to create this wick with the manipulation after it runs back up and continues towards this higher target. Okay. So that was a lot of information. I hope you kept up. If you didn't, that's okay. You can pause, you can rewind, you can look at what I've written down here. These are two good examples of manipulation that you're going to see. A lot of times in the market, you're going to see this daily, and this is going to be a strong criteria for a good entry. A good trade will always have manipulation for it. Okay. In fact, manipulation against you means that your bias is right. Good bias. Okay. So now now that we have this set, let's go to some chart examples. Okay. So for example, we have the NQ daily chart, right? So this happened actually earlier this year. So if you were trading earlier this year, you probably witnessed this happen, and you might have been fooled by it just like I was. So this is before I had a good understanding of manipulation. So we can box out this little range we're trading in. We pushed all-time high, we sold off pretty good, and we're trading in this range now where we push up and we start going sideways. Okay, so now we're inside this range, which means we're still, like, if you look at the broader scale, let's go to the weekly chart maybe, we're still in an uptrend, right? So the higher time frame correlates to having a higher draw on liquidity. Now technically, since we're all-time high, there's no actual level or PDA to use as a draw on a liquidity, but you can, at all-time high, it's pretty safe to just use all-time high as a draw on liquidity. Like, you just want to keep pushing up, right, until you see confirmation that you're not pushing up anymore, like for example this weekly candle right here. So we start chopping in this range, and we're using all-time high as our draw. Since we are at all-time high and on a higher time frame chart, there's not much reason to flip bias. So now on the daily chart, look, we have equal highs right here. We can draw out a little line here. Why is my shit, what? Hello? Why is it extended, bro? So we have this little level right here, equal highs here, and we have another high here. So there's a shit ton. There is an almighty amount of liquidity stacked up here. And this big wick is a huge liquidity target as well. So in addition to being an all-time high on a higher time frame, like weekly, where there's no reason to switch your bias, since these candles are kind of just chopping inside the range of this bigger candle, then we're looking for some type of manipulation to continue onward. So if you're going from a newer perspective, like how I was when I first saw this price action. So right now I was an experienced trader, and I see we're all-time high for so long. I was like, we have to sell off eventually. The market needs to correct, which is a naive thought because the market does not always need to correct. Clearly, as you can see, after breaking an all-time high here, we ran another 12% without even thinking of stopping, right? So the market does not always need to correct. However, the market does need to manipulate before a protracted move. So now that we're trading in this range, we can box in the range using the bodies of the candles, and we have these wicks underneath, right? So what happens? Exactly how I pointed out in this MS Paint drawing. I mean, this fucking absolute mess of a drawing. If you look at this example right here, what do we notice? Looks an awful lot like this example right here. So what happens with NQ is, so we push up and then we leave nice equal high targets. We don't take this high, we don't take these highs. There's a ton of liquidity, and then boom, we flush the bottom of the range. Okay, so the entire bottom of the range gets flushed. We take liquid here, we take liquid here. Now, what's another important thing to note in this example? Well, another important thing is going to be SMT, which I mentioned earlier, but now we're really going to go over it now that we can have two charts to compare. So let's go to the ES chart. Let me get rid of this. So on the ES chart, this is another good criteria of manipulation that will confirm your bias. And I didn't mention this because it's hard to draw, but now that we have two charts, well, maybe I can even put them next to each other. Hold on. And we're looking at this price action right here. Okay, so let's go over here. So what do we notice about NQ versus ES? Well, there's this low right here, Thursday, February 22nd, Wednesday, February 21st, sorry, which has not been taken by ES. But if we go over here, Wednesday, 21st of February, been swept by NQ, as has been the low below it. So now this is what we call positive SMT, where we have a positive divergence in price between correlated assets, where one asset goes further than the other in terms of sweeping liquidity. And the liquidity is important because you'll have small divergences in the direction of price all the time. Like sometimes a fair value gap will form on one asset and not the other, but taking liquid is really the important part of SMT that you need to remember. And so we get positive SMT here. So now that's a good indication that we are manipulating right now. So what are the criteria boxes we're checking? We got our first criteria, okay? Let's go back to our criteria. So our criteria for manipulation, one, we've got displacement. That box is checked instantly. We have displacement down here through this low, and we have a fair value gap here, and one here, okay? So plenty of displacement. We took liquid as a sub-criteria. We left good targets, which are equal highs here. And then now for confirmation of the manipulation, we have to violate some inefficiency. So as we're pushing back up here, what happens immediately? We create this little fair value gap here, boom, close above. Open above this fair value gap, go down, then we're gapped up, we're back down, but the whole time, what's not being referenced throughout this price action? This price action could give less of a fuck about these fair value gaps. Nothing is correlated to these fair value gaps at all. This is just chopping, disrespecting. There's no bounce from any fair value gap. So that's a good sign that we're manipulating here, right? Now that we know this is manipulation, we can be at the bottom of this range and expect a bullish bias, okay? You can kind of call it, the third step is your confirmation. This is more confirmation than it is prediction. Or recognition, sorry. You can recognize manipulation before a violation of an inefficiency if you have a strong bias, okay? So this is an example of range manipulation because now, as you can see, price just absolutely ripped to the sky. Just fucking mooned. From the bottom, we went up 22%, right? So that is a very good, for example, if you're a position trader and you catch a long down here, I mean, dude, you're banking, you're laughing all the way to your fucking caviar buffet, right? So that's some good shit. This is what we should be looking for. And as we know, price is fractal, right? So this pattern will repeat on many lower time frames. And if you watch my daily recap, which at the moment has 0 views, so I would not be shocked if you didn't, my executions earlier today were all based on manipulation. There was always manipulation in every trade I took. So if we go back to this long that I took right here, we have some consolidation and some range, okay? Let's box in the range with the bodies of the candles, okay? So we push up and now we're consolidating. We haven't broken any of these levels. We have wicks at the top, equal highs here, and we have these equal highs right above it, and we have this wick, okay? So these are our targets satisfied. So that's condition number 2, immediately satisfied. Then as I'm watching these 1 minute candles form, and okay, let's even back up a step further. We go to the 15-minute chart. As we can see, the 15-minute chart is very clearly bullish. We swept some liquid here, and then we immediately displaced through this 15-minute fair value gap, and now we're pushing up. We're kind of sitting inside here, but since we wicked out this candle right here before consolidation, we still have these relative equal highs as target. This is low resistance, so it's going to be a high draw. And then we also have these low resistance lows and these equal highs all the way up at 18,435, which was the draw of liquid on the day. So now we can go all the way back to our range right here. So right now we notice a range is forming during the kill zone, ICT kill zone, whatever, fucking 10 a.m. Like it's the most volatile hours of New York, 9:30 to 11. That's just common sense, right? So we're going through this range. We have a range we're consolidating in. Now what happens? We drop out the bottom of the range. Notice how the body closes underneath the lows of the range, the wicks of the range. It closes underneath. And what do we get? Fair value gap right here. Minus fair value gap. We get a tiny one here too. Okay? So we have all 3 boxes checked. We have, let's go back to our criteria. We have displacement, check. We have good target, check. And then for the trade entry, what did I weigh on? A violations of an inefficiency. So I took my trade. Where's the long tool? What the fuck am I saying? Right here. I took the trade right here because what happened? 75. Yeah, dude, this stop loss was ridiculous. I put my stop, I think, underneath this breaker right here because this is an order block. Order block confirmed, and then we break to violate the order block. So that's a nice stop loss right there. So then I cut this early. I didn't hold it like I should have. This is just demonstrating that this is where you place your entry. This is how you use manipulation, okay? So we've figured out how to identify manipulation. Now this is how we use it. The manipulation the manipulation leg is violated. Price confirms the higher time frame bias that we already established. Remember, I went back to the 15-minute chart. and explained very clearly why we were still trying to go up, why price still wanted to go up. If you go to the hourly chart, I can't see the box, so I don't actually know exactly. We were like right here. Yeah, so the hourly candle is this is a very bullish hourly candle here, right? This is hourly structure is great. We're respecting this fair value gap, delivering from this hourly fair value gap right here. So you notice that if we go to the brush, the low of this fair value gap was never closed beneath. So we know that this fair value gap is supporting price. So as we see positive momentum from this fair value gap, then we know that's a higher probability trade. As with the 15-minute targets, as with the 1-minute violation of the manipulation leg, to give you a super nice entry on the long, which you could have held for, how much is this? 100 points, 130 points, boom. Barely even had to think there. I'm lying, I'm bullshitting. It's gonna take a while to get good at recognizing this kind of thing, but it all comes with screen time. You see these patterns over and over again. You see fast red candles. Like, for example, a good way to spot if something is manipulation, and this is a good thing for trend line manipulation. I don't have an example prepared for trend line manipulation, so let me go and look and see if I can just spot one. Here we go, perfect. So what day was this? This was 6:25. I mean, I'm not gonna have 1-minute candles. Maybe I'll have 10 or 15-minute candles. Let's look. So the trend line manipulation that I saw happen and got stopped out on like a dumbass. Well, I mean, it's kind of hard because you're trailing your stop all the way up. You don't want to get caught by Apex's live drawdown bullshit, right? So I don't want to just leave it a break even. But so what actually happened here is exactly what I was talking about on the uptrend section of this little drawing I did. So if we go back here, we notice that we're in a strong uptrend the whole time, right? We're in a strong uptrend. Now we make this high. Now, where did this high form? If we go back to the 15-minute chart, we check all the boxes for manipulation here, and I'll show you why. So this was my original draw on liquidity. I wanted the high of this range right here, okay? So I caught this bottom right here around 115, and I'm looking for this trade all the way back up to the top of the range. Now, what do we notice right here? We body up right here, what happens? We don't quite hit the profit. Missed it by literally 1 point. And then, look at this. What's that? That's a higher time frame wick candle. Just like this one right here. Just like, where's my cursor? Damn, just like this one right here. We're creating the wick, and the wick is going to be the manipulation. So if we go back to the 1-minute chart on my journal example, look what's happening right now. So this high right here, there's still a target, right? So we haven't actually taken the target yet. So now there's relative equal highs, and that's a good target that checks the second box, right? The first box is displacement. Well, if you look at this candle, I mean, this is fucking ridiculous. We just fell out the bottom of the chart. This is displacement, right? We close down here, we create a massive fair value gap. You can see it happen on the 15-minute chart where we create this wick and then we push right back up. And the confirmation of that manipulation, I don't have a screenshot of it, but there was, I remember this very clearly, there was eventually an IFEG entry to take this back up to the high of the range and hit the original profit target after stopping everyone out. Because trend line manipulation, like I said earlier, the reason why it's happening is because you have a lot of liquidity being stacked up, a lot of trailed longs, stop losses. So price is going to want to stop everyone out before taking the original target. That's just how price behaves, right? It's looking to stop you out. It's looking to fuck you over. You got to get used to it. So let me look at like one more thing I want to touch on, and let me show an example from today. So it's SMT manipulation, right? So sometimes you're going to get a valid entry out the bottom or top of a range, but it's not going to have the manipulation that you were looking for. So it's not going to check the first box on this chart. However, what chart does it check the box on? It checks the box on the E-mini S&P chart. Body closes above this high with displacement. See so if we draw this box, right? Draw the box on ES, where we have our consolidation boxed in. What happens? We close above the range with displacement. Okay, so we're above the range with displacement now. Create this fair value gap. What happens? This fair value gap gets violated, the inefficiency gets violated, we go back down and we almost take the liquid. Why don't we take the liquid? Because NQ took the liquid. And why didn't NQ manipulate out the top? And you just said that we need manipulation and close above these wicks, and that's very important to make sure that this is a valid manipulation. Like, well, if ES does it and ES takes these highs, NQ doesn't have to do it. NQ can just sit right here above, underneath these highs while leaving a good target, and then you can end up trading off the manipulation leg of the manipulation leg. It's all like when you're ranging, everything's manipulation, right? Especially when SMT is trapping you inside the range. That's what, when you have SMT at this high, SMT at this low, SMT, you're just stuck ranging, right? And nothing's correlated. You're just going to go sideways. But we see that even though NQ doesn't take this high with a body, and it doesn't take this high with a body, so it's not technically manipulation on NQ's chart. Since ES does it for us, and these are correlated assets, and we get displacement anyways through the range, we can take a short once both of these fair value gaps are violated, and we can take it right down to the bottom of this range, and that's a nice little scalp. So that's an example of how SMT factors into manipulation. And yeah, I think that's it. You guys can go ahead and backtest this in your journals. Like, don't take my word for it. Backtest it, write it down, find it on the charts. This is some shit that you will see every single day. It will happen in every single price. Like, it will always be the precursor to a good move, and you should always be looking for this in your lower time frame trades to align with your higher time frame bias. To go from internal range liquidity to external range liquidity, you're combining every basic ICT concept here. Well, let me know if you all found this video useful. I hope it can help you with your trading, because this concept definitely was something I was lacking on, and I improved a lot in my trading and my trade management once I realized how manipulation works. So yeah, I'll see you guys later, and have a good one.